Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and those E-mini S&Ps. Big two-day rally if you go off yesterday's lows. We've seen about a 30 handle point move. Pretty much on the, things got really bad and we saw some selling and we saw some possible negativity, maybe even a little bit of volatility yesterday. All that's gone today. We rallied into yesterday's close. We rallied ahead of this morning, ahead of the testimony, and we're basically right on top of the all-time highs. And with earnings, second quarter earnings coming out, the key to watch this week, and actually next week too, will be the banks, which will start tomorrow. So the banks kind of set the tone for Wall Street and the rest of the earnings. So it looks to me like this could be expected to be another positive earnings season as we go into them on the all-time highs. Now, volatility, as you can expect, was lower today. Not by much. It was a hair lower after seeing a modest uptick early morning yesterday. And so volatility is telling us we're going to go back into that old trend. Higher stocks, lower yields and treasuries. And that's kind of been the trade that's moved the market over the past couple of years. And then it seems to me that we've had a few hiccups in there on the treasury side, but haven't really seen it on the equity side. And while some are looking at the lack of volatility as the complacency in the market, it is essentially what it is. We're not bucking the trend. We're staying the course. And that's why volatility has remained low. You need to have angst and fear and uncertainty. And right now that we just don't see that in the equity side of the market. And why? Well, we had the Yellen testimony today. Yellen talked about, she gave a very dovish statement. She talked about an uncertain recovery and possibly putting off rate hikes for the near future, which really means that yields should remain relatively low and stocks will remain the trade of the week. So I think that this is all pointing towards higher stocks, at least in the short term. We do have to get through second quarter earnings. And as the data comes in over the next month or so, key inflation data this week, followed by second quarter growth numbers in about 2 weeks, those are going to be what really drive the market. And while it's a double-edged sword for stocks because weak data means lower for longer, which really keeps stocks going higher, it'll be interesting to watch. But right now we're back in the old trend. Stocks going higher as we head into earnings, bank earnings specifically, right on the all-time highs. This is Todd Colvin coming to you from the floor of the CME Group.